Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts.
Hey everyone, checking in on the market. So we had a lot of profit taking today after the inability to hit a new all-time high this morning. But again, this shows the importance of zooming out, because if you're zoomed in on the 5-minute time frame today, it's an all-out dump. And it looked pretty brutal. And you might be thinking, aha, the bears played a trick on us yesterday with the FOMC. We are dumping and this is the collapse. And then you zoom out and you say, oh wait, we're just looking for a daily high or low. And this is still a potential daily bull flag. So this is a potential daily bull flag at this point. We did break 302 support, just barely. The 15-minute RSI at that point was absolutely crushed, down right around the teens. Hourly RSI came very close to oversold. I didn't play the markets today. I played the US or the Canadian MJ space just for a quick trade, but I probably would not have bought this dip. The reason being, I would have waited for the first hourly oversold conditions. Usually, and this is definitely a generalization, but it's right more often than not, after a big bull run, the first hourly oversold conditions, you can generally look for a solid bounce there. And it's because all of the bulls that maybe missed their chance on the way up, or maybe are looking to get in on consolidation, buy the dip, whatever the reason, that's just an observation that I've made across all different markets, crypto, MJ, regular stocks, and didn't quite get there this morning, came close. So bulls have to change the hourly trend in order for this to be a bull flag on the daily time frame, which means we have to hold 301.73 if we consolidate tomorrow morning first thing and then break the high of the bounce, which would then have us looking right back at the all-time high. If the bears keep some control, again, anything above 298.50 is just fine for the bulls on this daily uptrend. There's a lot of volume today, but a good bit of that was bulls buying the dip with that lower wick that formed. So looking at IWM, long lower wick, anything above 153.47 is a daily high or low. And that's a daily high or low compared to that level at this point. But again, hourly trend change needed. It was a great bounce at the end of the day, but until we see that higher low and higher high, we're not confident that our daily higher low has been set just yet. QQQ all-time high is 197.83. We did not break that level today. We do have a short-term support that is our daily higher low now at 195.29. And if that level were to break, it would happen before SPY loses its daily uptrend. That would just increase the odds that SPY could potentially lose its daily uptrend as well after QQQ. So let's see if QQQ gives us any early signal. But we know if that level holds, bulls keep complete control. XLF, daily high or low, anything above 28.23. Again, same scenario with the bounce at the end of the day, but an hourly trend change is needed. Pretty impressive bull volume on all these sectors and markets on that last hour of trading. So XLV slowing down, daily inside bar. If the inside bar breaks bearish with a break of 94.14 tomorrow, we'll look for a daily higher low to form compared to 91.48. If that inside bar breaks bullish, this move is not done yet, and we continue marching towards the all-time high of 96.06, which we are currently about 1.5% away from. Biotech sector pulled back hard this morning, but did bounce. Again, same thing. Bounces at the end of the day. We need an hourly trend change. And actually, did we break 81.59? You could consider that. We only broke it by 2 pennies, but you could consider that an hourly higher low and higher high. Certainly need a bit more follow through into tomorrow, but that's a more developed hourly trend change than anybody else that we just looked at. Daily higher low, anything above 79.71. And the VIX. So I would have preferred one more red day, and then I would have been looking for the VIX bulls to bounce because of the RSI reasons that I pointed out in the video yesterday. We got that bounce today. Again, nothing very meaningful. We did break short-term resistance of 1380, but most important level for me is 1520. But make note, when the RSI gets in the mid-30s, this one yesterday only got to the upper 30s, but it means pay attention. And we have a lot of historical data to use to make that conclusion. Gold. So gold tomorrow is either going to tell us that an equilibrium is the most likely with our high, low, and if we reject, we'll have to pull back and form a daily high or low. That will give us an equilibrium. So if we get a red day tomorrow, keep an eye out for an equilibrium. And if we break this resistance of 1520, it will be notable. And again, probability meter will tick to more probable that that monthly high or low has been established. And I just said to some friends today, the fact that gold and silver are still holding up this well with the market at all-time highs increases the chances, in my opinion, that the monthly high or low has been established. So silver has to break 1831. If we cannot break that level, then an equilibrium and tightening range on the daily is what we will be looking for. And the same thing with the miners. We're right up there, NUGT, 3182. Big time follow through from yesterday. You can see yesterday, at the end of the day, bulls really held on to this move. Let's go back to yesterday. So bulls really held on to this move for a little 5-minute bull flag, a really strong end of the day, and that carried over in today. It was a very convincing close for the bulls with momentum in their favor. So it's not surprising that that move did get followed through today. And while I did not buy for the swing position based on watching that happen, you better believe I put that in my library of memory for potentially the next time that happens, where it's so convincing into the end of the day. And a key resistance level, the high up to that point, breaks in the final 15 minutes and closes up at the high of the day. So again, NUGT has to break resistance of 3182. If we don't, and if we lose the hourly uptrend without breaking that level, equilibrium, if we do break that level, odds go up that the monthly high or low has been established. Oil has still not found its daily high or low. Anything above 52.70 is a high or low, but we're getting to the point now where even when we bounce, due to the size of the pullback that we've seen at this point, I would expect a daily lower high to form compared to 56.89. And if we would lose the daily uptrend from there, our weekly lower high would then be set. So paying close attention to oil. And if oil loses the daily uptrend, that's going to factor into my analysis of the overall market as well. And perhaps we'll be looking for weekly consolidation in the S&P 500 if we lose the daily uptrend in oil. It certainly won't just be oil that leads to that, but it's a little clue and a little piece of the puzzle. Natural gas topped out, profit taking before the inventory report. Again, psychologically, this is how I play the lead up to earnings, the lead up to inventory reports. If we're very extended in one direction, look in the other direction that day because of profit taking. Smart bulls take profit before an unknown event, especially when that profit is so extreme. So the 4-hour uptrend, higher low was 248. We bounced off of 248. That's close enough to be a double bottom, but now we have to be watching for the potential of a head and shoulders on this 4-hour time frame. If we bounce tomorrow, cannot break 260, that is a potential bearish entry point where we would look to go bearish, maybe 255, stop if 260 were to break, and then hope to roll over, lose the 4-hour uptrend, and indicate daily consolidation to form a higher low would have to form. All depends where we stand pre-market because a lot is going to change on this natural gas chart by 10 hours from now, 6 a.m. So we'll see where we stand and whether that trade is on the table tomorrow. I appreciate you watching. We'll check back in. I don't have an end of the day video here. We've got still battling this flea outbreak and I have succumbed to chemicals. So we'll see how that goes, but lots of vacuuming. I'm getting really good at vacuuming. And we've got a couple Chart Guys members staying for the week, doing some mentoring. Right now they're playing ping pong in the basement. They're going to help me plant some bulbs for the spring. And next time you're talking about another mentor service, ask if you can sleep over and see what their answer is. Because here at the Chart Guys, we're family, and we'll see you tomorrow.